Hey everyone, welcome back to another video, and today I'm going to tell you my prediction of what's going to happen with Tesla and also how I'm going to adjust my trading strategy based on my prediction. So if you look at this graph, these are the resistance points. Like if it gets too close, it hops back down, and you can see there's a pretty consistent trend of up, down, up, down, up, down, up, down. But what I want you to take notice of is look at these support points. Here it was August 11th, the price was 274, went up and went back down, but then this low was 330, up, down. This low was 380, 420, 421. So every time it goes up and goes back down, this support point is higher than the previous support point. Every new low is higher than the previous low. And what that means right here, and you can kind of see it, is that there's consolidation happening, meaning the range between the highs and the lows are tightening. And because the lows are higher and higher, based on technical analysis, I would say it's very likely that the stock is about to break out. And today is Tesla's Q3 earnings, and it's projected to go really well. So to me, that's more reason that it's about to break out. But a warning about earnings. The earnings could go really, really well, but it could not go as well as people think, and the stock could drop. The earnings could go really, really poorly, but it could go not as poorly as people were predicting, and the stock could go up. So earnings is not a guarantee of anything. Sometimes the correlation just doesn't even make sense. But again, based on this technical analysis, even if today wasn't an earnings day, if I was a betting man, I would say this stock is about to go up. Now, what does that mean for me? So I sell a lot of covered calls and puts. And because I think this is about to shoot up, covered calls might be dangerous, especially if I don't want my calls or my shares to get called away. So if you look at my trading journal, I will go over this in depth some other time, but the key things to note are my profit percentage and days till close and days till expiry. So days till expiry is just how many days till expiry from the date I opened it. And you can see I give myself a lot of time. And then days till close is when I'm taking profit, and actually much sooner than days till expiry. I never ever wait till expiry date, because actually in a much shorter amount of time, and you can look at this column, I'm able to take 50% profit. And 50% profit has always been my profit target because of this reason, because I can take profit fairly early and it helps me manage my risk. But because I believe Tesla is about to break out, for my calls, I actually don't want to wait till 50% anymore, because if Tesla shoots up really fast and it hits my strike price, that means my shares will be called away, which I don't want it to happen. So actually from now on, I'm going to start taking profit at 35 to 40%. And this way, I'm definitely going to lose out on my total profit, but I should be able to win in more occurrences and also keep my time lower. This is also how I manage my risk. I don't want to wait too long to take more profit. I always would rather take less profit in a shorter amount of time, so I'm making smaller consistent gains versus waiting longer and then risk having that really big mood that catches me off guard and wipes out a lot of my profits. But yeah, that's it. I'll keep it really short. If you don't know what covered calls are, Google it or check out some of my previous videos where I talk a lot about how to make money on your existing shares by selling calls, by selling puts. I'm definitely part of the theta gain. Selling is my strategy. But anyways, please like this video if that was helpful. What do you think is going to happen to Tesla after today? Thank you all so much for watching. This is Green Knight Trading, where Squires become knights. I appreciate you, and I will see you soon.